That's all this is. This is just the wise overlords, our central planners, trying to reassure us that everything will be fine, remain calm, no need to panic, stay right where you are. And for me, we have an economic 9/11 coming. Just like when people were told in Building 2 of the World Trade Center, hey, this isn't going to change our workday. Sure, the first tower has been hit by a Boeing 747, but everyone remained calm. I don't know about you, Mike, but I've been racing out of the building.
Yeah.
And I've been racing out of the financial building ever since 2009.
SDBullion.com is a high-volume physical gold, silver, and precious metal dealer. We are committed to being your trusted source for low-cost, highest quality investment-grade bullion products. Visit SDBullion.com for more information.
Welcome to another Silver Doctors exclusive interview. Today I'm excited to have returning guest, Mr. Phil Kennedy from Kennedy Financial, joining us to share his thoughts on the global economy, monetary system, you name it. So Phil Kennedy, welcome back to Silver Doctors.
Thanks, Mike. Good to see you again.
Well, I appreciate you taking time to sit down with us here and share your thoughts on what's going on. So I want to start off with, we're well beyond the halfway point, 2019. They've dropped rates, trillions in bonds is negative, and all that stuff. It's starting to look as if things are coming to a halt or edge or fall off the cliff or however we want to word it. And so what are some things that you're keeping an eye on the most? What concerns you? What excites you?
Well, Mike, we've been long overdue for a recession. You and I have been talking about this for years. It's amazing how many rabbits these guys have been able to pull out of the hat. But unfortunately, I think it's been at the expense of our sovereign currency, the US dollar. People are flocking to it now, but in the long run, we're going to lose credibility around the world. Every currency ends up failing in the long run. Just look at the pound sterling, right? The UK is a shadow of its former self. The US happens to be the world superpower at this time, but ultimately, we're going to come crashing down just like everyone else. And that's why we've been talking about this over at Kennedy Financial since at least 2015. And I've been warning friends and family as early as 2008, 2009, after the financial crisis. The laws of economics apply to the U.S. just like they do everyone else. We're not going to get away with it. It's not like these tricks and gimmicks are going to work in the long run. They may be able to convince people in the short run, but the reality is even your butcher, your baker, your candlestick maker is ultimately going to realize that, hey, these policies haven't worked for me. And you can continue to promise a China deal day after day, week after week. But the reality is my personal financial situation is getting worse. And I think that's what Americans are feeling. Sure, they see the stock market going up, but they also see these wild swings. If you give me a second, Mike, I'll pull it up. It's really just astounding what we've seen over the last 1 to 2 years. It's totally unprecedented. Nothing like this has ever really happened before, except for the Great Depression. But I always tell people, you got to zoom out. You got to take a look at this from a wide perspective. We just had this massive run up in the market, and all of a sudden, Donald Trump gets elected in around November of 2017, and then just boom, this blow off top. And then all this volatility, a smash, up again, a smash, up again, a smash. This isn't normal. This hasn't happened ever before, these type of instant recoveries. So I think we're in big trouble, and I think we're all going to have to go back to real money to protect ourselves.
All right. And so you listed a lot of great things out of that. So the one of the first ones is everyone's running to the dollar. And so I think more people will come to the realization that things are crumbling, not necessarily because of the things they hear. As you mentioned, you've been mentioning this for quite some time. So have I. But they're going to start feeling the pinch. And so I believe like the big squeeze is on because it's going to be hard to hide the news of things happening in Argentina and Turkey, things going on in Zimbabwe right now. And so there's nations that are crumbling. And even though they're running at a dollar for safety, the question will then be, where will people run out of the dollar into themselves? And so let's get into just some of the things you mentioned, the Dow Jones here. There was this past week, 800 points drop, and then it recovered a little bit, but yet the volatility still remains. Is this going to be a trend throughout the year, or will there be a final dip or drop, in your opinion, in the days ahead?
Well, Mike, I think the good news for you, myself, and your viewers is that the top may actually already be in. If we just take a look at the Dow Gold ratio ever since the early, 20th century, to me, I've been telling people, hey, it peaked right around here. It peaked in late 2018, and now we're plunging. Will that continue? Will this be a fake out move like we saw in 2016? Nobody really knows for sure. But the real thing to be interested in are these gray bars. Those are recessions. Look at this huge gap we've had, all the while the Dow going up against gold. I don't think that can last forever. I think this is it. I told Elijah back at the end of last year, I think that in real monetary terms, in terms of real money, gold, the Dow has peaked. And trees don't go to the sky. There's a limit to this stuff. And I think, personally, in my opinion, we're there now.
Yeah, and so we will see. And so clearly, if we were having the same discussion in other nations, Australia, and even just, I think yesterday I saw something mentioning that the euro has dropped in reference to gold price. And so just for a quick moment there, I think it got up to 1376, which is the highest in gold euro price thus far. So clearly other nations are experiencing the increase in value in gold in their currency. It just hasn't happened here yet. But yet you're saying that's coming pretty soon, huh?
Yeah, and I think the market's starting to reveal that. I get commentators from all around the world on my live YouTube stream, and they're telling me, hey, gold priced in our local currency is the highest it's ever been. So it's really only the US dollar. The US dollar is the only currency in the world that hasn't seen an all-time high in gold, but it's coming, and I think it's coming for sure. We're already starting to see it in the mining stocks. They're kind of following along and telling us the story. Year to date, the mining stocks, this is the Huey, up 35%. And even if you look at silver, which is lagging, silver year to date is up 10%. And I know it's been a long, hard bear market for all of us. Personally, I can't believe silver got into the teens. I thought it was a buy in the 30s. And luckily, I dollar cost averaged, and I hope your viewers and listeners did too. And hopefully in the months and years ahead, they don't FOMO in. Hopefully they look at these prices and they say, these are a bargain. Unlike a lot of the guys you interview, Mike, I am not a stockbroker. I'm a financial counselor. And the difference there is, first off, I can't offer any specific recommendations. I can only offer my opinion. And I think when it comes to any of these shows that we do, we better stick to that to be safe.
Yeah.
So, where I come in handy is from a counseling perspective. I think a lot of people fall victim to the same human emotions that we all feel, and those are fear and greed. Unfortunately for the metals, there isn't a real good barometer of fear and greed other than price. But in the crypto space, some of these guys have gotten really creative, and they examine things like Twitter accounts, price volatility, you name it. And there's one barometer out there, this Bitcoin Fear and Greed Index. And lately it's been fearful, even though we've managed to pump like 200% year to date. So I think that's what the metals market is missing. And that's where I've been trying to encourage people, hey, others are fearful to purchase real money. Now may be the time to start accumulating and slowly but surely sell a very toppy looking stock market and get your hands on the real stuff right here. You hear the sound of that. These are some 1948 through 1962 half dollars. They're about a third silver, a face value of 50 cents, and now worth $6 a piece. They should be worth far more. I know anybody who's a gold and silver bug in your audience would agree, and they've seen this snapshot before from the U.S. debt clock. But yeah, that looks right to me, about $725 an ounce if we had a real transparent accounting of the metals to all the dollars that are out there. So I just think it's heavily undervalued. I wouldn't mortgage my house to buy a mint case, but I think it's physical metals, especially silver, are still the cheapest thing on the planet.
Right, I would agree. And so, like right now, definitely, in my opinion, metals, in regards to what you can actually acquire with your fiat currencies, wherever in whatever country you're in, is probably the cheapest it's going to be, because eventually, I believe, especially with this negative yielding bonds out here, it seems like we're hitting records every week, by the trillions. Eventually, all that safe institutional money is going to have to run somewhere. And and I heard someone mention that you can either run to something that will lose value in the form of a government safety measurement tool or instrument, or you can run to metal, which is yields zero, but then it preserves what you have. And so I think, pretty soon people will wake up to that reality, and more people will start listening. And so take advantage of it right now, where metals is probably the cheapest they're going to be for some time. So, yeah.
I talked to a lot of smart guys. I had the luxury of talking to 4 of them recently. And it was a hit with a lot of people, and hopefully we can continue to do it again. But here they were. It was really enjoyable. I learned something every time I do this. And the point they make is, look, like, just if you were to revert to the mean of what, like 2% of all portfolios holding some kind of metal stocks, that would be like a 4 or 5 bagger from where we are right now. Nobody cares about this stuff. I have to talk everyone into it, even my own wife, who I positioned close to the bottom. I manage her money better than I do my own, because there's less emotion there. But by the end of 2015, I was just looking at the mining stocks thinking to myself, this is insane. I don't see how they can go any lower than this. And sure enough, they've only been pumping from there. They did a lot better in 2016, and now we're starting to recover again. But I think that these have a lot of room for growth. I think they've been totally overlooked. I think we have an artificial monetary and financial system, and we're going to have to go back to something real, something that makes sound in your hand. And that's always been gold and silver.
Yeah, I do agree. Now, a part of your earlier explanation, you mentioned this whole trade situation. And, I tend to follow the president's tweeting tirade every now and then. And so it looks like the last I heard is that he's backtracked on some of the tariffs, and in reference to the holiday season coming up. And I think he's not going to put additional tariffs on electronics, laptops, and things of that nature, things that we are here in the U.S. are heavy consumers of. And so do you think this whole trade war is just smoke and mirrors for what's really going on behind the scenes? Because I never quite figured out how that, taxing the citizens twice, by the increase of goods and services and all of the additional depreciation of our currency amongst this trade currency war, how it will make America great again. I never quite figured that out. What are your thoughts on that?
Well, without getting too political, I mean, I got the certificate hanging on the wall here. I studied fraud. Mm-hmm. I'm a certified fraud examiner. And the thing that's true with all frauds is they involve some kind of confidence man, right? Charles Ponzi was a confidence man. Bernie Madoff, another confidence man. They want to give you confidence that this plan that they're using is going to work, and it's going to make you wealthy, and we're all going to be better off as a result. And from my standpoint, the president is a confidence man. He's been talking about this China deal for months, and it seems to work for a moment, and then next thing you know, we have another crash in the stock market. Oh, well, don't worry, the China deal's imminent. And people don't seem to be buying that as much. And then when you hear stories that he called the 3 CEOs of the biggest U.S. banks to make sure that they have enough capital and liquidity, that's not very reassuring from my perspective. I don't know about yours, Mike. Right. So I think that just like Peter Schiff talks about how the Federal Reserve doesn't have an open market committee, they have open mouth operations rather. That's all this is. This is just the wise overlords, our central planners, trying to reassure us that everything will be fine, remain calm, no need to panic, stay right where you are. And for me, we have an economic 9/11 coming. Just like when people were told in Building 2 of the World Trade Center, hey, none of this isn't going to change our workday. Sure, the first tower has been hit by a Boeing 747, but everyone remained calm. I don't know about you, Mike, but I've been racing out of the building. Yeah. And I've been racing out of the financial building ever since 2009. I did buy the market up through 2014, but at some point I said, okay, QE and ZERP aren't going to work anymore. The likelihood that the market's going to crash is greater than it going up. And sure, I've been wrong in the short run, but I think, again, going back to this Dow-Gold ratio, it's very important to look at financial history. You have to zoom out and look at everything through the lens of history. Sure, we had this pump in 1929, but then what happened? The market crashed and it didn't get back there until the 50s. That's a long time. You and I are both relatively young guys, Mike. We may be living through an economy, raising our kids, eventually becoming grandparents, telling them stories about when we saw the S&P at 3,000. I think those are the stories we're going to be sharing with our loved ones someday.
Now, one of the things you hinted on, and I definitely want to get back to that, the ratio aspect, is the FOMC. And so I think it was yesterday just as well, I saw an article, I think it was on Zero Hedge, referencing that Jerome Powell has issued some type of silence. No Federal Reserve employees are allowed to speak out publicly or share opinions or something like that. And so it all has to do with, the implosion around us. And it appears like some of the board members or governors of the banks are sharing their opinions more than I guess he would like for them to. And so all that stuff, whenever somebody speaks, the markets usually respond. And so next month, what's your thoughts? It looks like it's a pretty high percentage chance that they're going to be cutting rates again. Do you think that they will be, more so doing it because of confidence, or they want to continue to remain separate and continue to be that separate institute that they want to tout as they, being good for us or you and I?
Well, I think we have to go back a ways to be reminded that most of these Fed chairmen don't really see themselves as independent from the administration that is currently sitting in the White House. Even Ben Bernanke came out later after the housing bubble had burst and said, hey, I had to say all those positive things in 2005, 2006, 2007 because I didn't want to make the administration look bad. And that's a pretty lousy thing to say in hindsight because they are supposed to be independent. And now you have President Trump demanding interest rate cuts, and the Fed, they're just too tight, which is directly contrary to what he said on the campaign trail. So it looks a little hypocritical from my standpoint. But one of the things that I find interesting, that's a little bit of a tangent, is the Fed has done such a terrible job of managing the money supply and full employment that you get things like this out there nowadays, which I just retweeted. They have all these like marketing campaigns like this one. Hi, I'm Kara from the New York Fed and I'm an intern. And isn't this organization that I work for great? And I just cringe inside when I see stuff like this because Henry Ford spoke about it over 100 years ago. If the average American understood their financial system, there would be a revolution by morning. And I think it's still coming. I think this second time, people are going to understand that the Federal Reserve didn't do them any favors. This Marxist central planning banking system is a failure. And we're going to be looking for something else. I think cryptocurrency is going to play a huge role. That's why I have this Bitcoin sign right behind me here. I know that a lot of your viewers and listeners don't like cryptocurrency, and that's fine. But one of the things that it brings to the table that they might take pleasure in is the transparency aspect, because we know that no one can ever sell 22 million Bitcoin. No one can ever sell 85 million Litecoin because they will never exist. And that's really been the problem with gold and silver over the last decade, is that the COMEX and the LBMA can sell more than may ever exist. And if it does exist, it's buried in the ground somewhere and will take a much higher gold and silver price to ever get it out. And I know that when most of us purchase gold and silver, we use a currency. So why not move to something even better, a trustless, decentralized, immutable ledger like Bitcoin or Litecoin for our purchases? And I know a lot of vendors out there are in the business of accepting that currency. So to me, it's a win-win.
Now, before I want to touch on the Bitcoin situation as well, but in your that explanation just a moment ago, as things come to an end, there will be chaos. And so social unrest, I've noticed this, it's increasing. in various parts of the world. We got the Hong Kong situation due to the political aspects between China and Hong Kong. And then we have Zimbabwe. That's something I've been keeping an eye on exclusively just because it's, they're experiencing the same problems they had 10 years ago. And then we got Philadelphia and stuff like that. So all these mass shootings and just social unrest, and at a time where people aren't doing it just because they're dire straight in needs of their livelihoods. How will people handle in America here, the greatest land, greatest country on earth, and the reserve currency status? If all that unwinds, what type of social unrest do you think we'll see in this country?
I think people are going to be extremely angry. I've been talking about that for a long time. I've had guys like James Wesley Rawls and Jerry Robinson on my show. In fact, one time I had them both on together, just talking about being prepared, having some food put away, knowing how to get clean water, just being able to do things by yourself without all of the modern conveniences. I think it's a wise idea. It's definitely tougher when you got little kids running around like myself, but everyone should at least have some MREs, something that can get them through a chaotic time, because the reality is we've had an exorbitant privilege. And I'm not the one who came up with that term. Someone else did. And I'm sure some of your viewers and listeners know who it was off the top of their head. But we've had an exorbitant privilege of having the US dollar as the world's reserve currency. And that is slowly but surely going away. And when it does, we're going to suffer all the same economic consequences that places like Argentina, Venezuela, and Zimbabwe have felt. And the worst will be the brain drain. Unfortunately, I think when that happens, America will not be the best place for people who have great skills. And they're going to look around the world and look at the countries, especially countries that are becoming blockchain islands, potentially like Malta and Singapore, and say to themselves, hey, you know what? That might be a better place to raise a family. And they're going to leave. And I told you before the show, this is what's happened with my friend and his brother, who happened to be from Maracaibo, Venezuela. One now lives in Miami, and the other just recently moved to Spain. And the one who moved to Spain had a bunch of businesses down in Venezuela, including a Subway sandwiches shop and a GNC. And he ultimately had to liquidate and take everything he ever made and leave. And he said the worst part about being in Venezuela wasn't just watching the deterioration of his hometown and all of the socialist policies come to fruition. He said the worst part was watching his countrymen deteriorate mentally to the point where anybody who had any success whatsoever was deemed the bad guy. And when that comes here, that's going to be a clue for the rest of us that it's time to find someplace else. And it'll be a shame, and I hate to have to say that. But I think, unfortunately, that's why we have to keep talking about this, because these consequences are very serious, Mike. So that's why I keep talking about it each week on KF, and I'm glad that you continue to do it over at Silver Doctors.
Right. That's very true. Now, so last question. I want to get your thoughts on, we have, and this is more so opinion piece, but we have a presidential election process underway, and the progressive agenda is getting a lot of headway because this being touted as free or discounted or cheap, whatever they want to label it as. And so at this current moment, when the economy's okay for majority of people haven't really suffered any losses yet, but just what we can learn from what's happening in Argentina, that the current Macri was surprised, caught off guard. He's more of a businessman, right center type of person, and in the process of building up the country again. But yet Kirchner and Fernandez, those on the socialistic Marxism type side, surprised the world, and as a reaction, the currency dropped. And so that got me to thinking about, okay, this upcoming presidential cycle, it looks like a shoo-in that President Trump will win because of what he's done and what he's touted as doing. But yet, is there a chance that we could be surprised here in this country if there's some type of market hiccup between now and that time frame? Do you think President Trump has a clear pathway like a lot of people might feel that he has or had?
Well, I'm no political strategist, but from what I understand, some of these Rust Belt states, the president narrowly won them. So he's got to go back to these battleground states and convince them, places like Pennsylvania and Ohio, that he indeed deserves a second term. And I think some people commented that he only won, if you look at some of these battleground states, he only won by something like less than 500,000 votes. So even though from a electoral college standpoint, it looked like a major landslide, the reality is he's got to go back and campaign again and try to explain to them why he made America great again, and he has to continue to make America great again. But one thing he is not able to do, and this is a certainty, is outpromise his Democratic competitors. I don't know if you saw this, Mike, but I got a chuckle out of this. This was an article from Babylon Bee, and it likes to poke fun and make political commentary. It says, hey, a 6-year-old saying, why don't we just give everything away for free, surges to top of Democratic polls. Really, that seems to be what's going on in a lot of these debates. The Democrats are trying to outpromise one another. But again, we have to look at financial history. The most expensive thing that one can obtain is what their government gives away for free. Nothing is free. There is no free lunch. All of this stuff is extraordinarily expensive. And as I mentioned earlier, when you have a brain drain and people look around the world and they say, hey, there's better places for me to raise a family, I'm going to close my franchises like Subway and GNC and no longer pay you any tax dollars and then take my talent elsewhere, it just gets even worse. It's a death spiral. And that's why you see hyperinflation to the tune of 1,000,000% per annum or per month or whatever it happens to be right now in Venezuela. Nothing is free.
Yeah, I agree 100%. Now, as we draw towards the end, I'm curious. I wanted to touch back on the whole cryptocurrency just because it is an alternative, whether you like it or not, it is here to stay. And, the future will be involved with some type of blockchain, cryptography type of currency. And so in your opinion, what would be a ideal allocation for someone with bare minimum or someone with a lot? I mean, silver, gold, cryptocurrency, anything else you would sprinkle in there in your own opinion?
So if I was talking to my own mother, first off, I would tell her don't buy anything other than Bitcoin. You can go on coinmarketcap.com and see hundreds of them and think to yourself, oh my goodness, well, why would I want to buy a Bitcoin when, it's $10,000 when I can come down here and just buy a Bitcoin SV, which is $131. That sounds like it's a lot cheaper. Well, there's a lot of things that go into this, like network effects, hash rate, just a ton of other things that your average person doesn't really appreciate. So if I was talking to a family member, I'd say only stick to Bitcoin, download something like the Cash App on your phone, only buy a little bit each week, don't go overboard, don't think that this is a get rich quick scheme, have a low time preference like Saifedean talks about, author of the Bitcoin Standard, have a long run approach. But from my perspective, again, I would not wager anything more than 1% to 2% of my net assets in something like that. Me personally, I have a much higher weighting, but that's because I think I understand what's going on and I feel more comfortable. And I also had a much earlier entry point. So it's easier to be a hodler of last resort when you bought Bitcoin at under $1,000 and Litecoin under $20, right? You could lose a lot of unrealized gains and still be okay. But as you're starting out, that's not necessarily the case. You could see 50% of your investment evaporate overnight. It's happened all the time and it'll happen again. This is the most volatile market in the world. But as long as you have a long range perspective, I think you'll be fine. And ultimately, your goal should be to use that Bitcoin and spend it like a currency is meant to be spent on real money, gold and silver. And I think over time, again, it's going to be a win-win.
Well, Phil Kennedy, it's been great having you join us here on Silver Doctors. Can you please share with us how people can stay in touch with you, follow you, because you share a lot of great visual aids with us here. So you do your research. So can you point people back to where you do your work at?
Yeah, sure. I guess the first thing they could do is follow me on Twitter. I'm posting something there every day. And that's real easy to do because it's free. You can find me at Kennedy Finance. And after that, you'll probably eventually find my YouTube channel where I talk about sound money, free market capitalism, and real economics. We have different guests on every week. And folks, definitely I want you to subscribe to that because it's been a battle trying to get the message, again, of sound money, free markets, and Austrian economics out there. It's not like YouTube wants to help you in that endeavor. But yeah, that's probably the easiest way. And also, if they want to pick up a mug with my mug on it, they can check my link in the YouTube links below in my YouTube channel and find the KF store over there.